Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep going with our trading plan on the euro currency. So currently, despite that market has taken a pause in a downward action, and we agreed to keep an eye on possible reversal pattern on the hourly chart, to be honest, it seems that, well, bulls have poor reasons to be happy, as overall performance that I see here and on intraday charts, well, it seems that we hardly get reversal pattern, and hardly euro currency shows any significant pullback right now. It's just because of the price action on other markets, guys. So we'll take a look again, as usual we do, with the consideration of the dollar index. So yes, it was minor pause on Friday. This market has shown some minor pullback. Yesterday it's again showing some upward action, although it stands mostly in the same area, but currently on the dollar index we do not see any significant pullback on, or just hints on possible deeper retracement. But this is not the major problem. The major problem, guys, currently stands on the interest rates. So you could see what is going on the United States Treasuries. This is monthly chart, guys. This is the performance of the 2 weeks in April. Actually, this is every April month, and market already stands 282 area. So just yesterday it was 275. So this is just, well, giant steps forward, and it's really very fast action. So we'll take a look at the weekly chart or daily chart. You could see what I'm talking about. This is outstanding performance for interest rates. Now all questions concerning yield curve and inversion and zero spread between the 2 and 10 year bonds currently take off the table. So the yield curve is normalizing gradually, pushing the high yields, or better to say longer yields, higher, and it shows this really outstanding performance. With such an environment, when interest rates are going higher with a giant pace and really very giant steps and very fast, currently it makes support to the dollar, and it really make the pressure on the arrivals. I mean euro currency in particular. Besides, if you take a look at the stock market, it also stands under pressure and it's turning to some depression. So this is sell-off on this S&P. Well, from that standpoint, currently on the euro currency, well, I would say that the chances on the reversal or very significant pullback stands not very significant, and chances are growing that market fails to form reverse head and shoulders that we discussed on hourly chart, and we talked about in our weekend. So theoretically nothing serious has happened yet, no tragedy has happened. So market has shown the upward action to the neckline. Neckline has been touched. Market now stands in downward action back to the 618 support. Here market currently is calling around the 618 support, which is 108.73. That's harmonically very close to the bottom of the left arm. Everything stands, well, from technical point of view, not bad. But just existing of the bearish signs, bearish for the euro currency. On other markets, such as interest rates, first of all, it reduces the chances on the success with dealing with this pattern. So from that standpoint of view, of course, it doesn't mean that you can't try to trade it. So it is possible, but it would be better if you will find the optimum combination of the entry point that lets you to save on the possible stop placement. So from that standpoint, since market already stands at some vital area, if market will not able to stay here, instead dropping back to the lows, it means the hand shoulders is failing. And when the hand shoulder is failing, you know what usually happens. Market breaks through these lows that we already see actually on the dollar index. This is another reason, by the way. So from that standpoint, maybe it's just a solution to current situation. Maybe it makes sense, for instance, to keep an eye on the 4-hour time frame chart and watch for flirting with the MACD predictor line. For example, if market somehow around this area within a few hours in today's session, maybe it will form the bullish grabber with this indicator, and it happens around 618 support. Maybe some minor bullish pattern also will be formed simultaneously in this area. That will be something that you could use for taking the position and save lots of money, because in this case you could stick with the actual grabber that might be formed on the 4-hour time frame chart that lets you to place stop relatively close and do not need to hide it below the head. So, and that lets you chance to take the part in this trade, because maybe, who knows, maybe indeed the pattern will start working. This is first moment. Second moment, maybe another reason, another way how it might be trading. For instance, at least to wait when the upward direction starts. So this market confirms the support, confirms the reversal point when showing some upward action here, right? Trend turns bullish here, and in this case it is possible to try and take the position on some minor retracement, something of that sort. Upward action, you take position on 30% retracement. It lets you to place stop right below these lows. I mean, not these lows of course, but lows that will be formed here. That also saves lots of money. So other words speaking, maybe some other ways exist, but the thing that you need to do currently, because overall environment is not friendly for taking long position on your currency, all you need currently is that to wait when the market confirms ability to move higher, confirms reversal, starts action with this reversal, and second, to minimize your risk with the placing relatively tight stop. Because taking position currently blindly right at this level, just because this is potential bottom of the right arm, it's currently in the current situation it is not sufficient context, or at least it leads you to significant risk, because with the taking position here you will have to place initial stop below the head, which is relatively far. And currently, since we do not have the confidence that indeed market starts reversal, by the same reason as I said, well, that makes the situation in general tricky, and makes me think that it would be better to wait for moments that I have just described. So that's actually what we have on euro currency. So let's keep watching. So it seems that within the maybe 1-2 sessions, we get the answer on the question whether we'll get some maybe deeper pullback or we're going to the next 1 or 5 target.